What is good, Tesla family? It's Ray J back with another video, and in this I'm going to be talking about the one and only Tesla stock, what you should be looking out for the future. I'm also going to break down what's going on with the overall market and how this may affect Tesla, what's going on with the news affecting Tesla, and what news came out that's super huge involving the debt ceiling and other factors like that. I'm also going to end the video by talking about some big pieces of data affecting Tesla as more shorts are piling into the stock. I'm going to break down how this may affect the share price for the more medium term. Before I break anything down about all of this price action, though, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed up to 10 free stocks, each worth up to $2,000. And the best part is, any could be a free Tesla share. The offer ends in just a few weeks. I'm actually going to be promoting this for just a couple more days too, so you won't be seeing this on my channel for much longer before I switch to something else. So make sure you check it out before the offer ends. It's a limited time offer. Anyways, let's talk about Tesla now. Tesla is down 2.38% for the day. It did something very similar to what I predicted. I told you guys that Tesla would likely see a pump, and let me show you guys this with the extended hours. We would get a really nice pump to between 178 to like 180, maybe around 178. We pumped to 177.38, coming just short of that, very, very close. We pumped a lot during the pre-market, right? Tesla pumped very hard after the news about Elon Musk appointing a new CEO of Twitter. That was very, very bullish news for Tesla, at least for the very, very short term. And that helped Tesla pump quite a bit. But then after that, I warned you guys that the market was not looking that great, and we could see a big rug pull. I wasn't sure if the rug pull would start as early as Friday or if it would start by like the next week. It ultimately started so far, but I am looking for signals and potential for the market to try to rebound a little bit before we do start to see more downside, in my opinion. I'm going to break down exactly why that was. So why did Tesla get rug pulled like this? The answer is, well, the whole market got rug pulled. If you look at SPY, this thing is down. It's down only about 0.13%, but it was down much more for the majority of the day, down over 0.7%. It just pumped near the very, very end because the market makers tried to get us above max pain. But that's about it. I mean, we started off closer to like 413, and we ended up going all the way down to 409, almost hitting the 408s. So we got a big rug pull on SPY for trying to rebound near the end of the day and closing still red, but not as red as where we were near the low of the day. The QQQ was also down 0.36%, but it did close above 325, which is an okay sign. I do believe there's going to be an attempt to rebound, a small one for the market. If it's bigger, I mean, I'm not really counting on it to be too massive anyways compared to the downside that's likely coming soon. And I'm still leaning in that direction, right? My conviction has not changed. I'm going to break down exactly why that is. But here's the question I first need to address, and that is, why did the market get rug pulled? Was there a catalyst? And the answer is yes, there was a catalyst. The news came out and was not good. To start us off, we had a Fed speaker known as Bowman who was speaking. She said that inflation is too high and the Fed has to remain restrictive. So the market got that pumped like during the pre-market. The QQQ was up and actually broke to a new high at 327 the pre-market. Then it got the rug pull after Bowman was speaking. And then the S&P 500 or SPY, let's just use SPY. SPY went to about 414, almost hitting 415, came close to what my target was, 414 in the pre-market. Then we got a rug pull down to 409. Why? It started off with bearish news because of the Fed speaker Bowman. She said inflation is too hot, the Fed has a lot of work to do, and they have to remain restrictive. On top of that, we had more bearish news that came out. Michigan University, or the University of Michigan, it basically has this market sentiment survey, and it gives us a lot of data involving market sentiment. And right now, consumer sentiment is dropping because of the debt ceiling fiasco. Now, President Biden was supposed to meet with McCarthy not too long ago, but they postponed it for many different reasons. Obviously, politics is getting in the way, and the list goes on for all of the different reasons. It's a mess. It's a disaster. And what I believe is going to happen is they're likely going to delay this whole like debt ceiling resolution for quite a while. And it's going to get very close to the deadline, if not even go beyond it, right? They may even like extend the deadline, but the bottom line is when that happens, that tends to not be good for the markets. And there is some fear that's now being incited by the media and also amongst millions of Americans, because this is, in essence, a critical situation. Even though we know they're going to raise it, the real question is what strings are attached when they do so. Are they going to be cutting governmental spending? Are they going to be limiting the amount of money that's printed? Who knows, right? I'm just hypothetically speaking. But the bottom line is, right, this is leading to things that are causing fear for the markets and potentially more downside moving forward. And on top of that, we had another bad piece of news. Inflationary expectations have gone up again, according to the University of Michigan, and they've risen from the 5 to 10-year forecast by zero point 0.2 to a 12-year high of 3.2%. That's much higher than what the decline of 2.9% was expected before. So inflation is expected to get higher as time goes on for the longer term. We're also seeing inflation expected to go up over the next few months. There was news involving Iran being more convicted on cutting oil production. That is similar to what OPEC Plus has announced. This is important because this could add to more inflationary pressures going into the summer. Am I guaranteeing it? No, but it's very likely if that does end up happening. And so far, the odds are heavily favoring that. Okay, so high inflationary expectations for the summer, for the longer term, are bad for the markets. The Fed speakers so far have not been helping. And then we have the debt ceiling, which tends to be quite bearish for the markets. It's not always that way because it depends on other circumstances, but you have to remember and you have to look at where the market is as we approach the big day. And you could argue that when looking at the PE ratios, I think I have the chart right here, and I can't make this bigger, it's going to get blurry, I apologize, but the forward PE ratios of the S&P 500 are quite high right now. They've been running up and up and up and up as if this has been a bull market, but honestly, guys, we're due for a pullback. This is what this is telling me. It's likely going to come over the next few weeks, approaching June, and it's very probable that's going to happen. Now, on top of that, as we approach the debt ceiling, right, what's going to happen is when the deadline gets closer, okay, Wall Street wants the market to go down, and they're going to use the media to their advantage. They're going to incite fear. They're going to get the market to come down because they're already starting to short. They're getting ready for lots of volatility. Look at the hedging against volatility spikes. That's been going up too. We're also expecting, right? We're expecting high volatility spikes. That's why they're hedging so much. They're expecting the VIX to make a big move to the upside soon. Maybe over the next month. I agree with that. I think the VIX is due for a pump to the upside. Why? Because of the S&P 500 coming down, which is running on a similar algorithm as the NASDAQ and the QQQ. And these things, once again, will affect Tesla and the collective market. Okay, so very important to note all of this stuff. Moving forward, you have to remember that the headlines were just talking about how consumer sentiment is just dropping to a 6-month low on the whole debt ceiling fiasco. It is just a disaster, and it's just going to continue this way as we approach the deadline, which is in the beginning of June. Be ready for that. Now let's talk about the market. We were well below max pain, almost hitting 408 on SPY, and then they ended up pumping us during the last like 2 hours. The market makers did that. It wasn't a big pump. We closed around 411, but we're still down for the day. And I am seeing signs that they may continue to pump us a little bit more, but as long as resistance holds, which I'm going to show you in a few minutes, it's very likely that more downside will still come regardless of where they try to pump us, whether it's 413, 415. They could even try to go higher. I mean, I really doubt that's going to happen, but if it does, it doesn't bother me because I'm still very convicted. I'm going to talk about that in just a few minutes. But let's first talk about Tesla. This news headline was a little bit misleading in my opinion. Tesla stock tips after Musk names the new Twitter CEO. Well, Elon Musk named the new CEO yesterday, and Tesla started pumping actually. It was pumping afterwards, right? That was bullish news for Tesla because investors know that if Elon Musk is the Twitter CEO, that's bad news for Tesla because he's not giving in as much time for Tesla. So now that Elon Musk has gotten a new CEO, he's going to likely have more time for Tesla. And that's something investors love. That's why Tesla pumped in the beginning. But then as Tesla pumped, it formed kind of like a trap and we had a big gap to fill and Tesla ended up getting very close to doing so, if not finishing it. And Wall Street used that as an opportunity to short Tesla down. And on top of that, we had the whole market coming down, right? For the majority of the day, the market was just tanking. SPY, the QQQ, the S&P 500, they were just crashing for the majority of the day. That also led to more selling pressure for Tesla. So that's the real reason why it dipped. It had less to do with Elon Musk naming a new CEO and more to do with the collective market. But now let's talk about some news that came out. Elon Musk responded to this. He said it was very nice. This right here is the FSD beta version 11.4.1, and it really shows how much the production has been improving for the FSD. We're continuing to see it growing and improving on a daily basis, and I consider this great news for Tesla. I also believe that Elon Musk is sometimes the dates he announces are not always accurate. Sometimes he's very early on them, and that's completely fine because as long as Tesla's continuing to grow and improve their products, the company is going to be fine. I'm not worried whatsoever about that end. But there's no guarantee the FSD or the fully autonomous technology is done this year. I think Elon Musk did mention that. But the bottom line is it's eventually going to be completed. Tesla is going to get safer and safer with the FSD. It's going to keep improving, and that is still great news for the company. Now, there was news about Panasonic delaying the batteries for Tesla. I mentioned that many times. It's now kind of passing by. It's not a massive piece of news like some people thought. But when it comes to inventory levels, the Model 3 is still not really getting sold as much as I would prefer approaching Memorial Day. Hopefully, as we get to Memorial Day, we see this thing come down. That would be a good sign for them. Inventory levels being high just means that demand could be slowing down for these specific models. And then production is playing a role, but it's not the biggest thing driving this because there were many instances where we saw the inventory levels much lower even when production was increasing. And then on top of that, there is clearly a demand issue in the USA and also around the world for cars, for used cars, and etc. Prices have been going up in some sectors for used cars, but they're also starting to drop in for others. And we're likely going to see more price cuts going forward. So that's why Tesla announced these price cuts. It did help them to some degree. But the good news I have is the Model Y is the most bought Tesla car that's out there and is continuing to be bought up like crazy in European countries and etc. The inventory levels are very low. They're around 100 right now. I think they're even lower than that. And they used to be at 600 just about a month ago, or even less than a month ago. So very good news for Tesla. These are getting bought up. The overall inventories are mixed in my opinion. I primarily talk about the 3 and the Y because they're the most sold, cars by a long shot. So that's why I primarily talk about those two. That's good news for them. Now let's talk about some technicals and volume data for Tesla. Volume is only 158 million on average. That is not too great. I'm sorry. It's not too great that it has high volume and it's selling off of it. That's what I meant to say. So it's well above average. Okay, average was 120 million. The volume is closer to 160 million for the day, but that is high volume, and Tesla is down 2%, which means the shorting, the selling pressure, that was very strong on Tesla compared to before. That is showing us that there's a lot of incentives for individuals to sell Tesla as of right now. Not saying that you have to, but it's telling me that people had this drive to sell it. We got a lot of short selling. We saw manipulation play a role too. And that's what drove the volume up. Tesla, as a result, sold off on that, and that's part of why Tesla's down. On top of that, the short volume, it actually continued to go up, right? It's at about 67%, at least as of yesterday. Still is relatively high. It's likely going to remain a little bit elevated. This is important because when it's at these high levels, it tends to drop a little bit. It could drop a little bit because Tesla might rebound, but I'm not too confident about the next couple of weeks for Tesla, the next month or so, because more shorts are piling in and we're continuing to see it slowing down a bit. Tesla's starting to underperform compared to the market. If you look at the price pairs ratio, so right here, right, Tesla was outperforming just temporarily. It was outperforming a lot earlier this year. It started underperforming a bit, and then it started outperforming just temporarily before it's starting to slow down again. That's a sign that there is some relative weakness for Tesla now compared to last week. And it's worth noting because Tesla is slowing down a bit. Now, looking at analysts, they're still saying Tesla's doing well, and I do agree with that, but we're going to be seeing more of these updates next week. And finally, Mondays tend to be strong days for Tesla, but Tuesdays tend to be a little bit weaker. So there is some potential for a rebound, but I would still be very careful because of the short interest. We saw this thing spike pretty hard. So if you look at the last like 7 days, for instance, right, we were seeing 19 million, 18 million, 18 million, then at 23 million, then 17 million Tesla shares shorted. And just recently, we saw about over 24 million. So shorts are piling into Tesla. They're manipulating the stock. And my prediction is we could see Tesla try to rebound a bit with the market. But as more shorts pile in and the overall short interest starts increasing on Tesla, they might start dragging this down. They probably will over the next couple of weeks. And that's what that's starting to tell me. If the short interest continues to remain high, shorts could start acting relentless and they can start attacking Tesla more and more as well. Now, what is a little bit concerning is there is a possible head and shoulders like development right here that could be developing. That's what I'm eyeing right now. Tesla right now is just trading a little bit flat. Is it possible for Tesla to try to rebound? Yes, but I mean, if it comes back to these levels, if it fails to break them, we have a head and shoulders then, and it's likely going to come all the way back down to 160 flat, if not lower. The head and shoulders does not have to be perfectly symmetrical. It could just the left side could be long, but the right side could be very short, and it could get a small rebound. It's very likely it's going to make an attempt to do so. The MACD is curling on the 1 hour time frame. I think there's a bullish divergence I saw. There is a possible bullish divergence here. Let me just double check it for you. Yeah, so there is a possible bullish divergence right here. The RSI was more oversold here compared to where it was like right here. It looks to me like it's starting to form, and this could mean some potential for Tesla to try to bounce at least as soon as Monday. A small bounce is very possible. We're going to retest maybe the 50 EMA, but then there's no guarantee this head and shoulders even plays out, because sometimes you could have instances where you fail to even form the right shoulder and the stock price just starts downtrending. So I'm seeing signs of a potential rebound in the markets. I think Tesla's going to try to rebound a bit, but it might not be very strong. Okay, and the bigger move is most likely still going to be to the downside, because you have to remember there is still this negative divergence that's existent on Tesla. And just because there's a negative divergence, it does not mean that it has to be counteracted by this smaller positive divergence. It's very likely it's still going to add to downwards pressure for the stock, which means we could get a small rebound, and then we're likely going to see more downside later on over the next couple of weeks. I will break down more reasons behind that in my video for tomorrow, but let me just briefly talk about a couple of other stocks. So what's going on with the S&P 500? What's going on with SPY? I like to talk about SPY because I primarily trade this. Looking at it, there is a possible bullish divergence that's developing. Yes, we have it. It started to break out, but it has to get above the 50 EMA. And there is a gap at that's unfilled at 415. I mean, I don't know if we're going to pump that much, but there is going to be an attempt to pump a bit, just a small attempt. That once again is not going to be a big move compared to the bigger downside that's coming after that anyways. Okay, so there could be a repeat of what I was saying before, another attempt to pump before even more downside. And what I'm eyeing right now would be the daily charts where we're seeing this head and shoulders formation. Now, to invalidate this head and shoulders, you have to break 417 and hold it. 417.62. My question is, how is that going to happen when there's a risk of more banks failing, the debt ceiling crisis is getting worse, consumer sentiment is dropping, and sentiment drives the markets to a large extent. And then there's also, risks of higher inflation. The list goes on, right? We have so many bearish catalysts so far, and I expect it to just get worse. We also have a lot of Fed speakers next week. I'm pretty confident that the majority of them have been more hawkish, at least most of them. And we have Jerome Powell next week on Friday. I will talk more about that tomorrow. I know there's a lot to talk about, but this is looking to me more bearish, right? This chart, the structure looks more bearish. I don't know if we're going to form this right shoulder and then start selling off, or if we're going to fail to do so. It could fail to do so and then just continue selling. But to invalidate it, we have to break 417. That's always a possibility. But even if this thing somehow breaks out, even if somehow there's some magic catalyst, the market breaks these highs, I don't see it lasting. Looking at the PE ratios, looking at other factors with the debt ceiling, it's still going to likely come down and start filling these gaps. I'm anticipating SPY to come down to 406. Then eventually, by the time we approach June, 400, then we're going to see the 390s, most likely over the next few weeks. Uh, I'm more convinced that that's going to happen. And my best estimates of how this is going to play out would be us pumping just a little bit, maybe trying to fill this gap. We may even fail to do so. And then we just start plummeting from there, and the market just continues to downtrend. That's going to lead to more selling pressure for the markets, even for Tesla, unfortunately, because of the way algorithms are designed. And for the QQQ, same thing is forming. The QQQ has this potential rising wedge. It held just above 325, at least closed there, but there are a lot of gaps on it. That's the first thing I want to note. A lot of these gaps are going to get filled most likely. Give it just a couple of weeks. I'm pretty confident that's going to happen. And by a few weeks, I mean, we're just a few weeks away from June anyways, but by June time, most of them should be filled, at least the ones that are very close to where we are right now. It is still holding this potential support right here. So it could make an attempt to rebound just a little bit, but we most likely are in a topping process. And I believe there's a rug pull coming. And if it starts breaking below this support, there's a lot of downside to come. We're going to be back in the 310s pretty quickly if we end up seeing that. So I'm not saying it's going to happen immediately. We could make an attempt to rebound, just hold these levels just temporarily before the bigger move comes. But I'm still more convinced it's going to come very soon anyways. There's a gap down at like 313. I think there's one down at 311. It's likely going to fill a lot of these gaps soon. And there's a bigger one down at like the 280s. Not too worried about that just yet. We'll just focus on the ones on the 300s. Anyways, when it comes to Tesla, before I end this video, what am I seeing? Tesla made an attempt to rebound. There's a possible head and shoulders forming, but there's no guarantee it even plays out. I believe Tesla's most likely going to move with the market. Tesla has a tendency of having this high correlation with the markets because, as I mentioned before, it's like the market has one giant algorithm. The algorithm that's affecting the S&P 500 is also affecting the NASDAQ. They're moving very similarly. They're green and red on the same days almost every single day. And that's going to affect Tesla. If you look at this price comparison, they tend to be very similar. They're not exactly the same in terms of how they move, but they're similar in terms of price action. So you can see like right here, the S&P 500, I believe this is, or I'm sorry, it's SPY. They pumped together, they fell together, they pumped together, they fell similarly. Tesla had extra selling pressure because of Elon Musk selling. They pumped together, they came down together, they pumped together, came down. Tesla started underperforming a little bit more because of like the whole Twitter fiasco and other things like that, and also because of their deliveries reports and things like that. But overall, for the most part, it's still very similar. And then you can look at the QQQ as well and other consumer discretionaries. Very similar price action overall. The only difference is Tesla has been underperforming compared to the QQQ as of recent, and a lot of that's happening because of what happened after the deliveries and other factors. But the bottom line is they tend to move very similarly. Even though Tesla was underperforming, it tended to be green on the days the QQQ was green and red at the same time, typically, and that's what is likely going to continue. So the added selling pressure from these stocks is likely going to lead to more downside for Tesla by the time we get closer to June, in my opinion. I think the debt ceiling is going to play a big role because Wall Street wants downside. Wall Street's going to do what they can to use the media on their side and to cause as much downside as possible for the more like medium term to make money on their short positions. If Wall Street lets the market pump one more time, just hypothetically, okay, what they're going to be doing is shorting at the top. They're using this as an opportunity to short very hard, open those short positions, reposition, and then they're going to let this thing drop and they're going to let their money ride for them. It's all just their game, their playground. I will break down more stocks probably on Sunday, but for now, I just want to note that Tesla should make an attempt to rebound. Let's see if it could retest like 170. We'll see how it goes from there, because if it fails, let's just say it like touches 170, then just rejects. If it starts failing, there are a lot of these gaps below. There's one gap down here at like 162. There's a very big one in the 140s. Tesla, if it does start breaking down over the next few weeks, which I think it most likely will by June time, we're going to have to watch this 152 support. It has to hold 150 to 152 for there to be hope of it holding up. Because if it breaks that, if it breaks below 150, it's going to fill the gap to the 140s. Okay? Not saying it's going to happen tomorrow. Don't panic. Just for the medium term and somewhat short term, we could start to see more volatility and even more downside for the markets. We're going to likely rebound first, okay? There's going to be a rebound, a bounce here most likely. I think Tesla's going to try to get back to 170. But if it fails to give us any good price action, then the odds are going to start favoring the bears. And Wall Street is very eager. They're very eager to short Tesla. They tend to do this. The short interest on Tesla is starting to trend up again. You can see right here, it's getting higher and higher and higher. It's likely going to continue on that trend, and they're likely going to manipulate Tesla and bring the price down moving forward. All right, guys, so I hope I brought some value into your guys' lives. I thank you all so much for listening. Don't forget, I have some merch for you guys if you're interested in buying anything. It's going to be around the comment section, so please check it out. And with that said, I want to thank you all so much for listening. The Moomoo link is down below and in the description. Check it out before they run out. I'm going to be promoting this for just a few more days. All right? Tesla to the moon, because the long term is still incredibly bright. And peace out.